All right, let's get on to the share market. And as regular viewers would be aware over this 2 weeks, I've been really nervous about the share market, the height of the share market. I noticed the IMF the other day was saying share market values are stretched relative to economies. I always get concerned in September and October because that seems to be when the share market crashes are about. For us mere mortals, we fear these crashes. For experts like these two, they see it as a great opportunity to actually buy good stocks at decent prices. So they have their watch lists, which we should be having as normal investors to take advantage of pullbacks. And so I've asked them to, each of our panellists this week and next week, to give us one stock that we should put on our watch list for a pullback or a crash. Carl, what have you come up with?
Yeah, look, it's really hard to do, Koshy, because obviously, the idea of a crash is a bunch of things you'd love to buy. I narrowed it down to one, though, and that was Goodman Group, so ticker code GMG, and that's the industrial and commercial property developer, big on the warehousing side of things. And it's just such a high quality stock, and it's never cheap. I mean, that's I think the way you want to look at this idea of what do I buy if there's a crash. You're looking at absolute premium, top shelf quality blue chips that are on sale. And frustratingly, and we've had to buy on this for well over a year, but you have to take that leap of faith with GMG that they're going to deliver that great growth that they have been delivering, because it's you're not getting it at a cheap price ever, but you never do. So look, a crash, let's say it's half price, it's on sale, that would be the first one I'd go to.
Right. Yeah. It's a really good theme that's emerging this week, because Domino's was another one that's been suggested. Always outrageously expensive, but delivers. Yep. Fisher and Paykel, very similar. Washington Soul Pat's another one. Henry, what would you have on your watch list?
Well, thanks for the question. I went slightly left field, I must admit, and I kind of cast my mind back to what happened last crash, if you can call it the crash, the COVID panic that we saw over a year ago, back in February 2020. And I've got to say, I've been around for a few crashes, and they're never much fun, to be honest, for anybody. But they do provide opportunities, and the opportunity that we took last crash, if that's what you want to call it, was in a stock called the Long Short Fund. LSF is the stock code. Now, this is an LIC, so this is a listed investment company. So these guys, under the stewardship of Mark Landau, have done exceptionally well. I managed to pick up this at just over $1 when things were getting turfed out. And the beauty of some of these LICs is that when the market panics, they tend to sell these assets down quite significantly. Not only do they crash themselves, but they also then get a bigger discount applied to them. And I think there was about a 35–40% discount at one stage for a bunch of assets that had already fallen. So for me, that was pretty much a golden opportunity. As I say, we picked them up in our small cap portfolio at around $1, $1.05. They're now $2.80, just over a year and a half later. So they've done extraordinarily well. And these guys, it's a hedge fund, so it does have short positions as well as long positions, which does give it some kind of a little bit of a shock absorber in times of trouble. So that does help them. But I just love buying assets for 70 cents on the dollar. And the great thing was that the market bounced so quickly as well, if you remember back in March of 2020, that this thing got left behind. So you were actually buying things that had moved already at a discount to where they were trading through this fund. So for me, it was an absolute no-brainer and has done very well for us. I was lucky enough to chat to Mark as well on a podcast I did. And he's a lovely guy, great team, very expert at what they do. And, you know, I'm not a smart person, but if I could invest in smart people at 30% less than their brains are, the assets in their brains are worth, then that, to me, is an absolute, it's a no-brainer.
Yep, absolutely. Really good rationale. I love it. No, excellent. Two good additions there.